What's up, everyone? I hope everyone had an amazing weekend filled with some food, filled with some rest. This week is going to be pretty interesting. So I would like to get some steak and then take a nap. So let's get straight into the video. So number one, Tuesday is when the buffoonery begins. So we have some news coming out intraday. Important news coming out at 9:45 and at 10 a.m. So we know last week when that happened, when we did have intraday news, we weren't in any trades. We waited for the market to basically give a direction. And then we waited for a pullback and then played the move, continued in whatever direction it was, right? So that's what we're going to have to do Tuesday. And then Wednesday, it's the big kahuna. We have the federal funds rate. We have the FOMC statement at 2 p.m. And then we have Jerome Powell's press conference at 2:30. So obviously that's going to affect the market a lot. IV is going to be very high this week. Most likely the markets are going to be very choppy. It's not going to be as easy a market to trade as it was last week. Last week, all we really needed to do was just follow the momentum. But this week, implied volatility on the option contracts is going to take a toll on the price discovery and the direction of the overall market. So it's going to affect everything. Most likely we're going to not get as much follow through momentum. Most likely we're going to have to trade as if this is a range bound trading market. So we would have to go long at support. And then by the time we try to go long as resistance breaks, they don't allow it to have that much follow through. So essentially we're going to have to adapt and see if that's what we're going to have to do for our trading strategies this week. So then on Thursday, we basically have some more important news coming out during market hours. It's not, unemployment claims happen at 8:30 a.m. It's not really going to affect too much. Maybe Governor Bailey's speech affects pre-market, but again, similar to Tuesday, 10 a.m., we're going to get important news happening intraday. And then on Friday, we have important news happening at 8:30 a.m. prior to the market open. So yeah, Tuesday and Thursday, we're going to have to account for intraday price action change. And then Wednesday, obviously, is the FOMC minutes. Every other day, the important stuff happens prior to market open. All right, so there's that for the macro view. So basically, earnings this week is going to be a lot of IWM names. So what I mean by IWM names are economically sensitive stocks. So yeah, no huge, crazy tech stocks. Obviously we have Uber and AMD, but we had the big FANG earnings last week already, so it's not going to be a huge change in the market as it was with Amazon and Apple, etc. All right, so here is a chart of the SPY now. Okay, I just want to simply give you guys an understanding of what I think is going on with the MACD indicator. So last week, initially, as the slow MACD line here crossed above zero, it became very easy to just lean long. All right, and that's basically what we did. We didn't go short. We barely bought any puts. All we really did was we went long at support and we went long as support broke. Right. So now, as you can see, the slower MACD line starting to slow down here, which means that the overall momentum is not as strong as it was like pushing up. So it's slowing down, right? But the price of the SPY is breaking above major levels of resistance. Okay, so clearly you can see that the price action of the candles is very bullish. So it makes all the sense in the world to be bullish, right? But now the issue is that two things can basically happen. Either the fact that we are falling on the MACD here. So we're falling on the MACD and the slow MACD line. So you can see the blue line is falling, right? And the slow MACD line is not, moving upwards as it was before. The fact that those two things are happening and that the SPY is breaking above levels of resistance basically points to two things basically shows that one of two things can happen. Either we continue exploding to the upside and we break this divergence and the price action pulls the MACD up, right? Or number two, this is signaling that the upward momentum is slowing down. So that is essentially my thesis. I think that this is, probably going to be like one of the riskiest swings. We bought December 2nd puts on the SPY, right, for 388. But the issue is that when the SPY shows this much strength, it is very, very, because they're painting a very, very bullish picture. It's almost impossible to try to lean. It clearly looks very, very bullish, right? We had a solid, strong candle close above 388. Apple basically lifted the market up. It didn't allow the market to fall, right? So in terms of price action and buying power, institutions have bought Friday, right? Very, very clearly. So what that's telling me is that there is a chance that we do explode to the upside. Unfortunately, what we've seen in the past is that every single time we've shown a lot of strength where we've closed above major levels of resistance and where we've closed purely beautifully bullish, they've been amazing opportunities to go short. Okay, so that is basically my thought process with this as well. We got into December 2nd puts. If they don't work out, that's fine. We can easily just continue short. We can easily just continue following the momentum to the upside. But the odds of us continuing to the upside is going to be solely dependent on, buying power continuing. But in terms of the momentum indicators, it doesn't look as safe. All right. So I hope I did a good job explaining this, because essentially the odds of us going up higher, like you would basically have to go long, similar to, shorter term, like lottos, right? But then the other thing that's going on here is that midterm elections are right around the corner. And if Republicans start, if a lot of Republicans start getting a lot of love in this midterm election, then that is also most likely going to cause the stock market to shoot up as well. Okay, so it's going to be pretty interesting to see what's going to happen, obviously, because when Trump was president, people were like, oh, the stock market was it was doing so well, blah blah blah. So we're gonna have to see if that is also going to cause the market to continue going up. And then we don't even know what the Fed is going to say. So it is what it is. We took this trade. If it continues going up, then 393, 395 is going to be the next target to the upside for longs. And then from here, now, say for example, the market goes to 395, right? Then we are in a sort of like no man's land in terms of risk reward. All right. So if you were to go long here, then the risk reward does not benefit as much. All right. So then, that's when things get a little bit more interesting. But purely, we just went short because it was abnormal strength and because the indicators were starting to slow down. Of course, that's not a guarantee that it's going to work, but it is what it is. So now, if this doesn't work out and if we continue moving upwards, we should only go short as this uptrend breaks. So if we're wrong about this short, right, which there is a possibility, it is what it is, the only time that we should then go short or try to catch a short is if we get a candle close below this trend line, and then we can get some follow throughs to the downside afterward. So at least now we have some levels that we can basically play against. So overall, next week is most likely going to be some dicey price action. We're gonna have to be very, very patient. And so there's that for the SPY. Let's take a look at the NASDAQ. So one of the things that's giving me hope for the short on the SPY is that the MACD indicator on the NASDAQ, you can clearly see this blue line is falling very, very sharply, but we had a big pop to the upside. So what I'm happy about is that we didn't get a close above this level of resistance on the NASDAQ, which would basically it would be much, much more difficult to go short. But the fact that the NASDAQ is trading below resistance and the overall momentum is still bearish, right? It's clearly falling lower, right? We're not crossing above. So if the MACD was crossing above, then it makes sense to be bullish. But the MACD is falling. So it pays to sort of basically fight against this momentum. And yeah, essentially the NASDAQ, we bounced off the 20 exponential moving average. We got a lot of love because Apple did really, really well, had a very strong move to the upside. But yeah, I mean, essentially we need to see if it can get a break and close above 287. And then once we get a break above, then, you know, things can start flying. But until then, we just have to try to wait and be patient for Wednesday. And on top of that, we could just lean long intraday, right? If our swings don't work out, whatever, we can obviously, we're going to be playing the overall momentum intraday. You could also see that the NASDAQ is not trading closer to the upper level of the Bollinger Bands as the SPY is, where the SPY is basically touching the upper level. So a continuation or a gap up, you know, even if we did gap up, I think we would still remain inside the Bollinger Band. So we still could potentially gap up on the SPY even to 392, 393. And yeah, I mean, things can still happen, and we can eventually even get a test up to 405. This would be the next major level of resistance on the SPY. So yeah, if we do end up touching 405, people here that went long would be very, very happy. So yeah, essentially we just need to see if that happens. But now when taking a look at the IWM, you can clearly see that we're very, very overextended. We're not. So the thing is that with the Bollinger Bands is, like I said, when we're trading outside of the lower level of the Bollinger Bands, it's much easier to lean long, almost blindingly, because this falling outside of the lower level of the bands shows that there is a lack of institutional buying power. So we can easily get some institutional buying power, and then we could easily bounce, right? So that's my protocol with that, right? But when we're trading outside of the upper level of the Bollinger Band, that is not a 100% guarantee that we are going to get a pullback, because this, when we're trading outside of the upper B band, shows a lot of institutional buying power. So I essentially, you know, as well with the fact that there's a lot of earnings that are going to affect the IWM next week, that could be a reason why we get a you know, a retracement back. And if we get a retracement back on the IWM, then the retracement is going to happen on the SPY as well. So that could be a reason. But until then, it's not safe to try to short extreme strength in the market, especially if we're trading outside of the upper bands, because you could take a look. The IWM had a similar move like this back in April, where we just broke, and we were trading outside of the upper bands here, and we never retraced back. We never filled this gap down. So sorry, this is November. It happened in November, as well as let me find it. Yeah, I confused myself. I'm not sure why I said April, but basically October we started really moving upwards, and then you can see that we didn't get much of a pullback. And then similar to November of 2020, we started breaking above the upper bands. We never got a retracement. And then you can see how we did back in November of 2021, where we just continued moving upwards, and then we didn't get a big solid pullback until the end of the month. So trying to short, basically my point is that trying to short extreme strength is not as safe as it is to try to scale into longer term calls if we're showing weakness. All right, because we can just continue showing a lot of strength, and institutions will just continue buying. So that's why it's important that if you do try to short, you get some time on the puts. You can't aggressively try to short and expect a pullback that same, you know, day or the next day. All right, so that was my point. Now let's definitely go ahead and take a look at the bonds and the dollar. All right, so recently the bonds haven't been working as perfectly. So we had some green days on the bonds, but you know, there's been some sort of a lag usually. Usually that doesn't happen, but there's there's currently a lag on the bonds. So we had a red day on the bonds, but the equities market had a huge green day. So this is showing that we're having some sort of weakness at resistance. And we know that if the bonds are showing weakness, then the stock market should also be falling and showing weakness. All right. So we need to see if this is going to continue playing out. And if we get another down day heading into tomorrow, then will this affect the stock market to fall down? All right. That's basically what we need to look at. Number two, we can see the VIX is very overextended to the downside, and it's currently trading outside of the lower level of the bands. This does not usually sustain itself. So you could look back in history and just plainly look at whenever the VIX was trading outside of the lower bands, this sharply, right? There's been a bounce in the market. There's been a fall in the market. There's been a bounce in the VIX. So for that reason, this is another reason why it made me comfortable to get into puts, that the SPY is basically due for a bit of a pullback. And we could see that with the VIX as well. We're very overextended to the downside, but we need to see how things play out. We can easily just stagnate a bit, wait for the B bands to catch up and then fall down even sharper. So this isn't 100% guarantee, but it does add to the thesis, right? And then when taking a look at the dollar is also clearly bounced off of support. This is not the most bullish setup, but we can see that the MACD indicator is oversold and it's heading towards crossing above. So when we do have a MACD crossover, obviously that is a bullish sign. So obviously we're at support. We bounced off of support. The MACD indicator is showing there's firepower left in the tank. So when the dollar does well, the stock market should be falling. So we need to see if that's going to continue being the case. But now one of the most interesting things is that Bitcoin is also trading outside of a major downtrend level that we had created. I think this was So this was in October. So a very major downtrend level. We could not really sustain it to the upside, and then basically it acted as resistance, and then as it broke down, it signaled a huge capitulation to the downside. All right. And then it was basically just acting as resistance this entire time. Now we're finally trading above it once more. So what is basically going to happen with this? From a longing standpoint, it makes sense. You could technically go long with a 20.4 stop, get a retest of 23 to 24K. That's 100% possible. So if that is the case, then that means that the IWM and the NASDAQ is going to just continue to start flying as well. And at the moment, the dollar is not going to affect equities and Bitcoin as much as it was before. So a lot of interesting stuff. I hope I did a good job giving you guys a holistic view of the market. But Bitcoin showing strength like this is grounds to show in the short term, meaning in the next few days, meaning in the next few weeks, that there could continue to be a lot of abnormal strength in the stock market. And the usual indicators may not continue working. So, of course, we have to just continue taking stabs at these trades, high quality setups. It is what it is if they don't work out. But yeah, I hope you guys had a good time watching this video. I hope I helped. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.